Welcome to the Scale Up Valley podcast, where we bring the best founders, CEOs, and investors to help you scale a business from 1 million to 1 trillion. Today's guest is Nicolas Hess, the co-founder and CEO of Roboyo. Nicolas, welcome to the show.
Thank you, Mike. Thanks for having me. Super cool format that you created. And yeah, looking forward to be part of it.
Thanks for the kind words. And you have a very unique story. As you know, we cover a lot of product companies here on the show, VC backed. In your case, it's much more professional services firm, backed by private equity. You started it in 2016, so your international expansion was also quite aggressive and quite impressive. And you are also doing something that is tough to do, but when it's done well, it is super fine. It is super good in terms of scaling up a company, which is your M&A process that I think it's also helping with your growth strategy, both organic and both M&A. But let's go through, get to know a bit more about your background and about Roboyo before getting into the main topics that we'd like to discuss and then share with other fellow entrepreneurs that are going through the scale up stage as you did since 2016.
Yeah, cool. No, thank you very much. So as I said, my name is Nick. I'm was born and raised in Germany. Then after, let's say, high school times, I went a bit abroad and away from home for 9 years, actually. Maybe that was also part of our international expansion here at Roboyo that we talk about later a bit. So I went abroad, lived a year in Argentina, then studied bachelor's degree here in Germany, went then to do my master's in Dublin and Barcelona, then moved to Switzerland for 3.5 years before I started Roboyo with my 2 other co-founders. So that's basically where my international part comes in. My wife is from Spain, talks Spanish at home, so we have a very international background.
Now I can see why you were so successful in international expansion. You have been preparing yourself during 9 years for that, right?
It's a soul mission. No, exactly. And before starting Roboyo, I worked at Deloitte in Switzerland. Was great experience. Really in the consulting space, getting my let's say foundational skills right. I think that's always very good and tough school. And starting your career in a consulting firm, I think was at least in my case very helpful. Although I not always happy, but overall I think looking back was great. And basically then also saw like the topic that we are covering at Roboyo there the first time on a project. And that's how I got in contact with this topic called intelligent automation or hyper automation.
Right. Sounds amazing. And you're talking about, but first let's go into Roboyo because people are listening and are thinking, okay, let's get to know more about Roboyo before asking follow-up questions.
So Roboyo, what we are doing is we are, as you mentioned already before, we are not a product firm. We are basically an IT consulting firm. So purely professional services, dedicated around the super interesting topic of hyper automation. Hyper automation are basically different technologies that you can use to automate processes, to build applications for companies quickly, to really improve, let's say, the ways of working within firms and boost your productivity, be more efficient, reduce costs, etc. And that's basically what we dedicate ourselves on. And I think what has been very interesting for us, of course, was the way of growing the firm as a professional service firm. And I think we'll go into a bit more detail later because it has probably also some differences to scaling a product firm.
Right. So let's come back to the follow-up question. So you said that you started the company with another two co-founders in 2016. So typical question, what has been the split of responsibilities? What has been your lessons there? So it's always very important nowadays to start at least with two or three. But sometimes this is also a source of conflict, and as the company scales, especially in such short period of time, it's difficult to keep everyone on the same page as well.
Yeah, no, I think for us it was actually quite interesting. So I was on a it's actually maybe the story of how we got to Roboyo, because that's also connected to your question. I was on a project in India actually, and there was around shared service center optimization for one of our Swiss customers, and I was there together with another colleague and a third-party firm who was actually understanding process for process automation. And was getting into talks with them and say, like, what are you guys doing? Crazy acronyms that you guys use. What are you doing? Sounds interesting. And then I explained a bit. Basically, I said to my Deloitte colleague, hey, can we then not do this ourselves? I mean, basically, it sounds super future-proof. You are automating recurring tasks. You are basically creating a digital workforce. You are helping companies in their digital transformation. So all these nice buzzwords were basically crossing. This must be something that is cool. And there was not a lot of competition back then. And like also the big IT firms, consulting firms didn't really have it on their radar, or maybe on the radar, but not executing. And that's basically then we started thinking around, and then today, basically, I also have the perfect CTO for us, which is also long-lasting friend called Sven. And basically, then we met up in our old employers' offices, and basically, I mean, also we then jumped into the cold water. Had no idea, of course, what this was about or how to build a professional service firm, etc. It was completely, let's say, with a very optimistic business case, bit delusional probably. And then us three, basically, how did we split it? So Christian and myself, we both came from the Deloitte consulting part, so really around process optimization, around rollout of transformational projects with customers, etc. Sven, he came from Capgemini back then, and was real technical delivery background, and was then basically also we said, okay, Sven would take over the CTO role. Christian, myself, mostly on business development at the beginning. And then afterwards, like when it got a bit bigger, we then split out where, for example, more the HR marketing topics were with me. Christian was more the sales part, and there was some other topics like IT, etc. So was basically
an evolution.
Yeah, exactly. Was an evolution, and also there, I think there was something that was very cool. We had a very, let's say, very diverse in the sense, a founder team. Like from our skills, it was super diverse, so it was very different, each and every one of us, and that definitely helped us at the beginning immensely. Yeah.
And today, Roboyo, Nick, what is the size of Roboyo? Whatever you can share in terms of revenue, ad counts, etc.
So today, Roboyo, we're operating in 15 countries. We are around 650 people today.
Incredible.
More or less, around 75 million of revenue that we're doing. And I think for us, I would say, of course, as you also mentioned, we have PE investors, etc. But for us, it was, it sounds maybe a bit cheesy, but not like always about achieving like massive revenue numbers or head counts. For us, it was really from the beginning, and that didn't change a lot now throughout the last 7 years, from really starting with 3 people to where we are today. around building a company that can actually compete in such a competitive market. I mean, nobody waited for another IT consulting firm, no? So I mean, if there's one thing that is enough on this planet, it's IT consulting firms. So there was really something where for us it was clear: first, it's super tough market. Second, we want to stay in our niche, and let's say the niche over the years became bigger, but still a niche, where we really want to be a force that needs to be reckoned with, where we can compete against the big guys, against the big system integrators, outsourcing firms, etc., and be known in our part of our very, very small part of the super big IT market, and basically there be the number one independent firm for our customers. And this is basically where we started, which was a big wish at the beginning. And again, I think nobody of us really understood what this meant. But let's say from vision, it's quite similar to where we are today and where we want to go. So it's less tied, I would say, to, of course, we have 3-5 year plans, etc. And there are, of course, and also like quantitative goals that we go after. But I think the point of like, building something on a global scale that has impact in the area where we're working, I think that's our number one goal.
I assume that when we are talking, especially about IT consulting and the services firm, it is dangerous because we can start competing based on price, based on cheaper resources, instead of delivering value, like in any company. But I'm much more thinking about even the traditional sectors that are a good inspiration for us, right? So typically, if you are developing a product with great IP, great modes, difficult to copy, but nowadays there is always this. It's difficult to go in that way. We always need to keep ahead of the competition and find our niche. So it seems that even playing in services and not having your own product, you were able to find a set of competitive advantages and your own niche, your own category, and surf a trend like we do in VC, but here in private equity with a different mindset and mechanisms to really be quick, kind of leveraging an opportunity that you saw in the market, that maybe the big boys or the big companies, to not be talk about boys or girls here, were not able to attack, right? Because they are so big that they are not able to specialize themselves in just one category. They want to add that category to their mix. And this is also interesting from an exit perspective, because at a certain point they would like to acquire maybe this category, and Roboyo would be in a great position for that if the time comes, and if you guys want to at a certain point.
No, I think so. There's a lot of very interesting points that you just touched. So I think it is probably exactly the same compared to a product firm, exactly what you mentioned, a lot of competition in the market. Maybe on the professional services side, but no, probably also the same for product firm, is like really, you have also a lot of, or we have a lot of competitors that basically have, I mean, you know them like an Accenture, Capgemini, Infosys, etc., who are massive firm, hundreds of people, who can exactly also, as you mentioned, basically, if you go down the price route, complete outcompete you, because I mean, they have the resources to suddenly build up big teams, etc. But what we had, and I think that is for me always like the interesting part also about entrepreneurship in total, I think, is really clear focus, clear dedication, and at our point also have to also say it was lucky, we were at the right time. No, so that was also clear. There was new technology trend coming up. I mean, at the beginning we tied ourselves very, very close to UiPath, which when we started was a 20 people firm, and then basically did one of the biggest tech IPOs, I think 2 years ago. So that's was something where We also, and again, call it luck, basically went with the right partners, were very early in the market. And then also, I think for us, again, not being able to rely on massive financial funds or whatever. I mean, especially at the beginning, we were completely bootstrapped until we were around 120 people.
Wow.
It was not like that we were able to, okay, let's invest and try if this works out over the next 2 years. No, we really had to see what do the customers ask for. Can we get money for our projects? If not, okay, let's put it to the side. So there, I think, is then also again the big difference towards the big IT players who, of course, I mean, if you're already doing tens of billions of per year with a lot of different tools and not just one dedicated, let's say,
Right.
niche that you're working on, of course, it's very hard to innovate yourself, no, and find new interesting markets. And again, then also the question is what we do actually interesting to them? Because I mean, if you're already in such a size, what was big for us at the beginning, they wouldn't even touch, no? And that's like also very very interesting, yeah.
But nowadays, you start getting closer, especially in this category, to those big consulting companies, right?
Yeah.
So with 75 million in revenue,
And for us today, of course, our standing is very different. I think we have quite a unique standing also in the market overall. So first of all, I would say we have like 3 main competitor groups. First is the big SIs and outsourcing firms like Accenture, Infosys, all the ones that I mentioned before.
Yeah.
On the other side, you have all the big fours, like accounting and tax consulting firms like a Deloitte, EY, PwC, etc. And then the third is basically smaller competitors that we have, like also pure plays, people who are very focused on one or two of the technologies that we work with. And I think our standing is very different because first, what a lot of our customers don't like, and I think we get to this later, but our customer base is basically only Fortune 500 or Fortune 1000 firms that we work with. So it's not like mid-cap or anything. We just aim for also the same target customers that all the big guys aim to. Yeah, exactly.
Or large enterprise customers, right?
And what you can see with them is interesting that there is, and this I completely underestimated myself as well at the beginning, that there is a big hunger for working with specialized firms on very specific topics, because we don't go there and say we can solve all your IT problems. No, we go there and basically say, let's talk process automation, let's talk low code, let's talk conversational AI, and that's then basically things that where our customers, and it is like continued phrase that we get in our feedback talks with the customers, etc. It's like really this, we like that you guys are super dedicated and like laser focused on what you do. And that is of course like our main good thing against like the very big guys. If you look towards more like the big four and the other accounting firms, they are in some areas they do what we do, but then also not on a global level because they are mainly country organizations, and we have a very global setup. So we have one talent pool, one global delivery model that we work out of, and that's basically how we differentiate towards them, and can then also be aggressive on prices if need to. We can be more global than the local Deloitte or whatever. So if we have a lot of, as I mentioned, very big customers where we work also multiple sites globally, which would be very difficult for the big four guys to have like a, let's say, concentrated approach on. I know this back from my days when I was at Deloitte, it was very much your Swiss country organization. We don't work here with the German fellas, and then the other one, the partner don't like the other partner from the Spanish firm or whatever, and then you directly see, okay, that's not a really global organization. So that's our competition there, or let's say advantage. And on the smaller guys, on our pure play competitors, there we are simply so much out of scale now, where we can provide basically in all the big markets the same services. We are so much bigger in terms of depth of offering and the amount of technologies that we offer to our customers. And this actually, like, if you look at these three main competitors, or let's say competitor groups, is basically how we can really differentiate and have a very unique standing at the moment in the market.
What I love about your strategy is really the category, the focus, but it's as you are saying, it's not just a very small niche. Maybe you started with few technologies, but you are expanding it. But at the same time, you don't have an offering so big and so generalist as the big ones, and you are also competitive against the smaller ones because you can offer more solutions to your customers. And then you made it in that niche a global company, right? So which typically I think that's what scales the best, because when you have too much complexity, I think that the work of scaling up, it's all about killing complexity, and sometimes it's difficult to explain to someone who has never scaled a company, because it's counterintuitive. So we always think about how do we add more variables to the mix, and really playing with industries, geos, sizes of company, use cases, in your case, technologies that is related to use cases, right? So it's important, because then the complexity of your business are the number of geos times the number of industries times the number of sizes of companies. In your case, it's just one enterprise, large enterprise, right? So that's why it's so important to it seems easy, but the ICP and it's so important to be really narrow about what we want to achieve, and then step by step opening it a bit more, but not opening it so much that it becomes so difficult to scale, so much bureaucracy that then the growth will start to slow down, right? Like any large company.
Sorry, that's exactly how we did it also. I mean, for us, 100%, as you described it, we started out with one technology that we work with called robotic process automation, RPA. That was basically at the beginning what we started. We then noticed like, customers also want more and more, let's say, connected topics. So we started intelligent document processing. We did some first conversational AI topics. We started in the low code and app development direction. And now last one that we basically added was process mining. So that's basically exactly as you described it. We came from one and built up our credibility. Their customer knew, okay, these guys are really super deep into this technology, a lot deeper than all of the other competitors, especially the big ones. We then expanded into new ones, brought them into our customer base. And that's basically where we are today. And then also on the services side, expanded quite a bit, where we started at the beginning just as an implementation firm. Now we have more than 80 people, basically all non-technical consultants. So really talking about big transformational programs that we work with our customers. And that's, exactly as you described, is very similar way for us at Roboyo.
And something that I really loved about what you just said is it was kind of, you were able to become a trusted partner with those large enterprise companies. So you already had the customer. Now it would be much easier to start introducing services to those customers. And those customers, by definition, large corporates, they are almost global. So it was also a way to go global, or I would say it to be even important for them that you could roll out the project in a global way for their team. So it was also a path for internationalization. Then I think that the difficult part there as an entrepreneur is, okay, maybe the clients are pushing me to go in directions that I don't feel I'm an expert, or maybe it's too much, and I can start become kind of a bespoke agency and just start offering all the technologies that the specific blue chip client is offering us. So I think that they're saying no and staying focused, but at the same time staying open and listening. What are the patterns that I see a lot of clients asking for to select the next technology?
And I think, like, I mean, there was, of course, many times, and is still the topic for us, and we are super strict on what we want to be and can be. and what we don't want to be as a company, which fields we also don't want to serve. And of course, I mean, short term, you might lose out on some revenue or margin or whatever.
Right.
But I think longer term, the customer really appreciates it if they know that basically, hey, these are the experts for this topic. We will not go back now tomorrow and say we can also help you with your S/4HANA migration. No, this will not be in our field of interest in customers. Then also, really appreciate this.
Right. So let's go to the international expansion. So it's really, you're talking about 15 countries so far, and you also have on your LinkedIn 24 cities, 4 continents, really a global company. You're talking about Fortune 500 clients, 22 of the DAX 40, the German index of the largest companies in Germany, companies with which it's more than half of them. So we were going in terms of international expansion. So what were your main lessons learned scaling up your company and making it global, right? In such a short period of time? We need to remind the audience, you started in 2016, so still 7 years, only next January, 8 years, and again, 75 million and 650 people. This is quite impressive growth, and a lot of firms would be happy to be present maybe in 5 countries at this stage. It would be already a huge success. So with so many countries, this is really quite impressive. I know that with enterprise, this is also a path to expand, but yeah, give us an overview about your lessons learned making your company global.
I mean, that would be a long episode.
Right. It could be just an episode about that, right? Just the main takeaways.
I mean, there's so many takeaways also to this. So I mean, we actually got into it more accidentally, I would say, because for us, when we started and also the firm and expanded quite quickly, like over the first year, we noticed we as a super small firm here, we cannot attract also all the talent that we want. And then back in the days was basically full employment in Germany. It's super hard to find people. And then, as I still had also connections from when I studied in Barcelona. I knew a colleague there, and she was basically then the perfect person to set everything up, because we saw back in the days then was a high unemployment rate also after very well educated graduates from Spanish universities. We basically were a kind of we already had this global mindset also from working remotely and getting also people on board from different locations on the same projects, whilst we also still are big in favor of having offices. So I don't want to say we are a remote only company. But there was something that basically
it's an hybrid model so far. Sorry to interrupt you. Right.
Yeah, exactly. So I mean, we now try to do more and more affiliating people to offices. Because again, also, I mean, if we're talking about fast growth and talking about maintaining culture and not becoming the next just boring big consulting firm, we need our people to be interested also in being a part of Roboyo culture. So that's why especially I expect more than just, let's say, doing a good job on a project. I expect also people to take care about newbies, to be part in the offices, to be part of our culture, what makes this company special. And this is something that for me, fully remote doesn't work, especially if you're scaling so fast, because then you just become one in a million. So that was one important learning. The second important learning for me was it is always a lot more costful, or let's say costly, than you think. So every estimation you do on international expansion, take it times 3. You probably end up somewhere where it could be. So there was, I mean, looking backwards, yeah, I don't want to insult myself or anything, but it was let's say rather aggressive mindset that we had, and yeah, everything will go right. But again, I think that is then also part of this this process where we can take also more risky decisions than the big corporates. So this was something that, of course, we didn't have this probably planned, or also the cost structure right. This was a risky topic, but it worked out for us. I think what we also see is, and this is also very important, we of course have like one vision, one mission as a firm, and also like values that we propose in the countries, and that we ask our employees for. But there are different, let's say, different nuances in the different markets. The way you talk with your US customers is very different to our Spanish customers, you know, and the way you attract talent is different, the way you do business is different. And this is something that I think also, again, super important, that you are adaptable and not just have like this one for example, sales methodology that is what you follow, and you cannot look left and right. This was also something where I think we were quite quickly in adapting then also to the new markets, bringing local people in. That was super important for us. On the other side, we had usually, when we opened the new markets ourselves, basically always trusted people to start that. Because hiring, or at least in my experience, might be different for other people. Hiring, like if you set up a new market, a completely external MD or whoever you want to hire there, that's usually super difficult, because it needs a mix of experience, not let's say so much job related. This for me is secondary, but more like, how does the company work? How do we go to market, etc., which is very different if you come completely external. So there we usually went with like people that we already know, people that we wanted to relocate, etc. And then basically, once, let's say, the setup, etc., is done, we then went with local colleagues to set or let's say expand in the market.
This is a great advice. So it's really important to have a strong connection and relationship and trust in the person that you are sending to that new market. But then that person or that talent needs to find local people to help them really penetrate the market and open the market.
And especially, I mean, again, if you come from massive financial background of an Accenture or whatever, it's probably easier to hire everything external. But for us, it was always like one shot has to be right, because for us it would have been like probably for the whole company a disaster if we go, like our first internationalization was to Spain, as I mentioned before. If this would have gone wrong, that would have probably sealed our fate at the firm. Also, there was like something where we with the tightness of resources and basically growing out of cash flow only, that was something where it was just impossible for us to basically go from let's do it with externals and hope it all works out. So it was clear that it had to come from us.
It sounds great. And so I imagine that the majority of your markets today are both in Europe. So it started in Germany, then your second market is in Spain. And so majority are in Europe and the US, being a super large market for this kind of services. Do you have any other markets that you like? Because you're talking about 4 continents as well, right?
Yeah, so we are also present in Australia. That is a very interesting market for us. Really great movement there. Hungriness for technology, also hungriness for working with dedicated smaller partners like us. So that's a great market. The US, as you said, and probably will be this year our biggest market already. So I mean, that's is for us extremely important. Super successful. Great story also for us, and a lot of great customers that we can serve there, which is awesome. And then Europe, basically, everywhere in Central Western Europe. And then basically in our global structure, we have some delivery centers where we then basically also serve global projects from.
Got it. And so you said that in until you got to 120 people, you have been bootstrapping. So was this from 2016 to when?
2020.
2020. Wow.
Yeah.
Really, in the pandemic, in the beginning of the pandemic, you decided to change it or to go
basically
in another path.
We had the kickoff for our investment process like end of March 2020, which was exactly when COVID started. So we had also all our investment meetings, etc., all virtually. Which was also not really cool, but on the other side, was still, I think, for our market, which is extremely growing, and I think our track record didn't make like a big difference back then. But I think how did it get to this? I mean, for us, it was. We got a lot of approaches from strategic buyers, like the big ones that I mentioned before. But was for us clear, hey, wait a minute, if we're growing 100% a year, and basically most of our customers are just at the very, very beginning of their road on process automation.
Right.
Why would we sell the firm? I mean, it wouldn't make any sense. And also there, it was not like that we wanted to just make a quick buck and then get out, because again, the chance was too interesting, just too big to just let this go. On the other side, you also have to be fair. Let's say our financial footing back then was, I would call it borderline. So it was really something where also back then we just noticed we need somebody, and also none of us really had like a financial or accounting background, where he said, hey, we need somebody who can basically help us bring this firm also on the next professionalization level, where we have some strong partner in the boat with us, who wants to basically, is also aligned to where we want to go and what we want to do. And that's then basically where we said, okay, we don't want to sell the firm. On the other side, we need some support and also some capital to expand further. And that's then basically where we said, okay, private equity route would probably be good, because it's quite interesting in private equity market, especially over the last let's say 4 or 5 years. They really look more into professional services firms as well. And so where this was very different time before that, venture capital is, at least for professional services, very difficult. They usually as you know anyways, look more for product firms, etc. So was then for us clear, private equity it is. Was then for us also clear we didn't want to sell majority, so we looked for minority investor, who can then basically help us on this road of becoming a better firm, investing some capital to basically de-risk the company's position. And that was then something what we looked for, and it actually very quick process, was a lot of interest also. And then basically started April, and we had everything signed beginning of September. That was then also very quick. We found a very good partner there with MML, which helped us a lot.
So great metrics, still great potential to grow. It was not great metrics of the past without any potential to keep growing, right? So as you said, beginning to surface or to explore a big opportunity ahead. So at that time in March of 2020, what was the size of the company? Were you in how many markets already? Do you remember?
I think Bootstrap, we went into 5 markets. We already went into the US, which was another, let's say, interesting chapter. But again, also only through personal contacts, and also not big. So I think when we started or let's say until 2020, we had maybe 10 people in the US or so. So there was something that still try to survive, and was of course, I mean, US is a very different and interesting market, but it was very tough for us. And yeah, exactly. So we were in around 5, maybe 6 markets before that. But was also something that the investors liked very much. We did this expansion already, and we're also able to basically deliver projects globally, which most of our competitors don't do.
Do you remember? So in terms of headcount, it was kind of 100+ people, right? At that stage.
Exactly, something like this.
And in terms of revenue, do you remember it was already 10 or?
12, I think,
12
around
million.
that. In 2020.
And did you make any acquisition until that moment, or acquisitions only started after the private equity investment? Okay,
exactly. That started then, and that was basically something where we also said to the PE guys, there are several smaller companies like us also in the market that are interesting or that are blocking our way in maybe certain markets, etc. So would it not be interesting to start something in the M&A direction as well? So that was definitely part of this.
Got it. Can you share how much have you raised so far? I think this is public, right? So I'm not sure if you are comfortable sharing or not.
Yeah, in the first round, and we're just about to finish our second round. I mean, first was around a bit more than 20 million euros. And the second round will be, of course, bigger. Maybe next time we can talk about it.
Oh, that is an amazing excuse for a second episode, also because I see the time flying and can go in depth, and I still wanted to go to M&A. So maybe we need to get you back to discuss fundraising and M&A strategy in more detail, because it's incredible how time flies when we are having a good time and when we have a great story, right? To share.
No, exactly.
So, and I imagine that those smaller companies were kind of that third group that you were talking about, the first group of competitors. So you were saying, so of course you couldn't acquire an Accenture or a Capgemini or a Big Four.
Not yet.
Not yet. I love the mindset. That's it. Not yet. We need to. Talking to my podcast producer, we need to extract this snippet to promote the podcast. Not yet. When I ask
exactly.
But anyway, so you saw there an opportunity.
It was out of this third category. Johan, 100% right. And I mean, comes out a bit back, and I think we discussed it already before. The, let's say, integration also is, of course, a very different topic if you're people-only firm. No? So basically, our assets are not machineries or code or whatever. It is basically people. We want to keep the people. We are in a super fast-growing market. We need the talent also, and also talent, I would say, on every level. So it's also not that we say, basically on a leadership perspective, everything is done and dusted. We know everything. No, we want to have experienced also entrepreneurs joining Roboyo, taking off a responsibility for certain parts in the business. And that's how we did also the integrations in the past, where we offered interesting positions also. For us, it's always important that the founders stay on board. So we don't want to basically have them leaving the firm after the firm is bought by Roboyo. This is 100% clear, and also clear no-go criteria if this is not the case. We have tried to really build, and that's, I think, the important part, people buy into the vision and the story. So if we would now say, okay, in 2 years we want to be bought by Tech Mahindra, that's then probably not the vision that these entrepreneurs want to hear. No? So we want to be this independent force. We want to be a global IT services firm with impact, and that's, I think, where people want to be part of. And yeah, that's then basically where we look now. At the beginning, of course, very different scale. Now also bigger firms that we want to acquire for certain topics, usually around 3 topics. It's geography, technology, or methodology. We say geography, there's some interesting markets that we are not present yet or that we want to strengthen. Technology is then basically around, okay, do they have some cool technical skills, or do they work with some cool tools that we don't work with yet, but our customers ask us for, or that we want to integrate proactively into our portfolio. And the third one is then on the methodology side, something where, what kind of consulting services do we not offer at the moment that other consulting firms offer? So, for example, we bought a lean consulting firm, which surprisingly does lean consulting, and basically, help our customers to optimize processes before we automate. You know, it was a super cool puzzle piece. They are hugely successful for us. And that's basically the 3 categories that we look at if we think about M&A. Yeah.
I love that approach. I imagine that a lot of companies would like to use or buy or implement the software that's of your partners, right? Because you are a professional services firm, but then they are not ready for that, and the project will fail. So having that consulting and maybe not again distracting yourselves going in that direction and doing this for the clients, it seems also smart. Just giving one step back, how many companies have you acquired since you started the M&A strategies? So you got invested by PE in 2020, September. So which means that the M&A strategy or the M&A route of growth starts in
21.
Okay.
So in 21 we acquired 2 firms, and in 22 3. So 5 in total yet.
Got it. Any outlook for 23? That's we are already September. Right?
There will definitely be some acquisitions coming this year, maybe 1 or 2.
Okay, but non-disclosed yet. So
no.
They are on the pipeline, right?
Yeah, exactly. Yeah.
Okay, and do you think this will be? And by the way, how do you think about combining organic growth and M&A
That's
growth?
super
This
important.
is one of the
So for us, the focus is always on organic growth. So that's 100% clear, because we want to be, or let's say, for me, the point is like, if we are in such a fast-growing market as we are, and we don't grow organically, then something is off. And they can basically just be that we are not relevant, or let's say our services are bad, or we don't serve the right products, etc. So that's then basically something where our focus is always on organic growth. So last year we also grew 35% organically, and then together with the acquisitions grew another in total than 100%. And that's basically where our focus is always. Organic growth is definitely number 1. And then if we can accompany it by some interesting acquisition targets, then perfect. If not, then not. Okay.
So in overall way, the ambition is to keep doubling or growing in 100% year over year.
Yeah.
And now that you are getting to a very large size, it becomes more and more difficult to grow by organic growth. So this year you target for 35%. So which means that the 65% would need to come out of M&A. So what you are saying is as the company is so big, the organic growth rate will become less and less, but you don't want to get to a point that you would have kind of 100% M&A growth, and the current portfolio is even shrinking. I'm not talking about it, but growing just 5% or 10%.
No, so our minimum goal for organic growth is 20% that we set ourselves, and that is clearly for us number 1 priority. And it's also not that we say our overall growth has to be 100% every year. Definitely not. So it's more like really that we basically go at the beginning of, or let's say last quarter of the year before, say, okay, this is our organic growth number. This is the most important part. If then there are some acquisition opportunities coming up, which complement is perfect, but if it's not that we have basically a pure M&A strategy, definitely not.
Yeah. And again, that's a different mindset. So this is not VC. Even if it was VC, you are at 75 million. So it's a different size where kind of 50% would already be an amazing growth rate. And having in mind PE, I would even assume, depending on the strategy, that 20-25% is not a bad growth rate, depending on what you want to optimize for, profitability or growth, or a combination of both. That is also a difficult tension, right?
Yeah, no, 100%. And for us, it's clear we were always profitable as a firm from the first year, and still are. And that's like for us, also part of this organic topic is clearly it is not growth at every cost. We look very hard on also the quality of revenue. What are we doing? What are high quality services? And it has to be like a healthy mix between creating also EBITDA, but growing the revenue as well. So that is both on top of our heads.
How do you see, you were talking about the quality of revenue. So how do you see kind of recurring revenue, which is one of the things that, for instance, VCs love to see in SaaS businesses.
Private equity as well.
Private equity also loves recurring revenue, right?
So there's a clear movement on our part as well to move more to recurring revenue topics. So at the moment, this is probably around 20-25% of what we do. But our ambition is clearly that this goes over 50% in the next 2 to 3 years. So there are different models where we serve customers differently, where we help them also on support and maintenance topics, hosting solutions, and really more like on a maybe digital outsourcing part, which I think is another very interesting topic. We're just at the beginning. So that's basically how we see it. So it's a clear trend also going there.
Right. And final question around this topic, and we definitely need to bring you to the show again, Nicolas, if you are willing to, of course, and also to celebrate the news that are coming according to what I've listened in this episode, which is we were talking about your investment thesis or on your M&A strategy. So you talk about that you want the founders to stay on board, that they buy into the vision, that you want to stay independent, to really build a global player. There is not an exit already in the horizon yet. So do you have any other criteria in terms of the target? So should it be kind of 1-2 million EBITDA, or 5 million EBITDA, or 10 million in revenue, 5 million in revenue? So do you have any kind of North Star in terms of the investment thesis around the metrics that the business would need to have in order to be acquired, apart from what I really enjoyed, the geo, the technology, and the methodology criteria that you shared?
Yeah. So basically, no, we don't have like specific, let's say, defined goals on revenue, earnings, etc., what they need to provide. I think for us, it's more like, is it a relevant add to the business? And of course, as we become bigger, the point of relevance is also changing. No? So, for example, now we wouldn't acquire anymore a 15 people firm, for example, because for us, the effort of integrating is then basically higher than the value it brings. But overall, it's not like that we say there's a certain need of thresholds, etc., that companies have to achieve. For us, it's really like, okay, how does this make our offering better? How do we improve on the services side? Which customers can we serve with this new offering? And that's then basically how we calculate our business case then behind it.
Yeah. So I see it's much more on what is the value that company brings to the portfolio and to the strategy of the portfolio. But what you are saying is now there is kind of a minimum thresholds to make sense to integrate in the group, also given the risks of acquiring a company, right? So would you say that at this stage, would you see kind of 50 people or 30 people would be minimum, or larger than that?
Yeah, I think that this is fair to say. Because if not, then also, I mean, if we get new services in, usually the guys are then directly consumed internally by Roboyo people from all different regions who want to bring the services to their markets, etc. So if you take the example again of 10 people, that would be too thinly stretched and basically to get the people then also working in the new markets, etc. So we need a bit of firepower. Plus our projects are also simply a lot bigger now, where we and also need more people in this respective area. Yeah.
Nicolas, amazing conversation. As
Thank you very
the
much.
audience knows, I would love to stay here for hours and ask all the questions possible, because out of my curiosity, and also always willing to learn and learn more. I see so many companies, but we always, as much as we know, we think that we understand what we don't know, and
Exactly.
that's why I always leverage this conversation to know more. And I also do this on purpose, also to help all the community, including yourselves, other entrepreneurs, to learn from each other and create a community where we can support each other in our growth trajectories. So let's close without going through all the questions that we typically ask to our guests here on the show, but just ask the number one question of that sequence, which I think is one of the most relevant and profound and philosophical or self-reflective question, which is, if you would have the opportunity to have a coffee with Nicolas at the beginning of 2016 when you started Roboyo, what advice would you offer to that younger Nicolas?
I thought a bit about it. I think for me, the number one topic would be, don't be afraid of big names and big competitors, no? Because I think that's like the advantage that you have as a small speedboat firm, let's say, is I think really there's laser focus, and you can drive so much more value for customers compared to the big guys who think, they have everything under control, and are big in certain markets, usually very slow to see new trends, etc. So that's would be definitely my advice, because at the beginning we had a completely different focus. We didn't want to go for enterprise customers at all, because we thought like, the Accentures, Deloitte, etc. They already work with them and they don't want to work with small firms. And then just by coincidence turned out that basically even our first customers were all already big firms. So that was something that I think we had a completely wrong understanding of the market back then, and I think that's something where don't be afraid to push the big guys. I think that would be my number one.
Amazing. And it's also fair to say that today you know that you were able to do that, right? So at the time it was kind of a fair fear to have. And especially I think that's an entrepreneur, am I being too bold, too ambitious, too crazy? And there is a fine line between the craziness and the confidence, right? That and this is really an important stuff, especially because we need to be able to stay confident and to not be able to show the results for 5 years. So we need to be confident in the vision and work towards the vision during a long time, where people start laughing at us, but then they start saying, oh, maybe they are getting there. And they're to the point that, they were visionaries, right? They were amazing thought process. Congratulations. But in the beginning, everyone would say, you are crazy to go in that route. So that's what is also so special about the emotional growth of being an entrepreneur and being a CEO of a company. It's really an emotional roller coaster.
100%.
Nicolas, we need to have you back to talk about the post-acquisition integration, also how you keep building your your leadership team, and also to explore a little bit further on M&A, because I believe it's a topic that is becoming more and more important. Also with this trend that we had in the show, this new route for entrepreneurs, instead of starting a company from scratch as you did, go buy a company and scale it. This new search fund, entrepreneurship through acquisition trend, and I think that's a good combination that M&A can also inspire those entrepreneurs. Nicolas, thank you so much for making the time.
Thank you for having me.
Sharing your story.
Yeah, it was great. Thank you very much.
Thank you. And to our community, thanks for being there. We keep bringing you the best of the best to make your life a little bit easier as you scale up your company. See you soon and keep scaling.